to the Wisdom by Harry YouTube channel. My name is Harry.
And I'm Mary. We're so excited to have you here today for another fascinating episode. Man, Bitcoin has been all over the place lately, you know?
Yeah, it really has.
Like, just last Thursday, it hit, what was it, $85,900?
The 10-day high.
Yeah, a 10-day high, great. But then, right after that speech, it tumbled back down to like $83,400.
It's wild how sensitive the market can be, you know, even to news that was like kind of expected.
Totally. So for this deep dive, we're going to try to figure out what's really driving these price swings.
Yeah, you've got some really interesting sources here. We're going to look at what happened immediately after that speech at the crypto summit and also compare what we're seeing now to a past Bitcoin cycle.
Yep, one source is all about the market's reaction to the speech, and the other one dives into whether this looks anything like the 2017 bull run. Our mission today is to figure out what all this means for Bitcoin's future, you know, where it might be headed.
Sounds good.
Okay, so let's start with that $85,900 peak right before the speech. That's got to be a big clue, right?
Definitely. That 10-day high tells us there was some serious positive momentum building up. Traders were feeling good, at least in the short term.
Right, and then the speech itself, the main message was like continued support for crypto, including that crypto strategic reserve idea. You'd think that would have sent the price even higher, right?
You would think so, yeah. But the price actually dropped about 4% from that peak right after, forming a long upper shadow on the chart. That usually means the buyers who pushed it up were met with a wave of sellers taking profits.
So even though the speech was positive, it sounds like the market was already expecting it.
Exactly. The market's always trying to anticipate what's coming next. If there wasn't anything truly new or surprising in the speech, that initial excitement could have easily fizzled out, leading to some profit taking. It's interesting that it happened even though the message seemed good on the surface.
Right, and here's where it gets really interesting. One of our sources pointed out that the volume of trading during that 4% drop was actually pretty low. So what does that tell us?
Well, low volume during a price decline often means the selling pressure isn't that strong or widespread. It's like, imagine a football stadium where only a handful of people leave after the game. This doesn't necessarily mean anything's wrong, but if everyone's rushing for the exits, that's a different story.
Gotcha. So maybe there's just a few people cashing out, not a full-blown panic.
Exactly. It could have been people who already made some gains or were just reducing their risk after this big event.
Makes sense. Okay, so the immediate reaction was a dip, but maybe not a sign of a major trend reversal. Now, let's see what the derivatives market was telling us, because it sounds like there was something different going on there.
Yeah, there was. Despite the price dip, the derivatives data actually suggests that bullish sentiment was still pretty strong. One source mentioned a liquidation heat map that showed a ton of Bitcoin positions getting closed out, like $159.59 million worth in just 24 hours.
Wow, that's a lot of money moving around. But the key here is who was getting liquidated, right?
Right. Short liquidations, meaning people betting against Bitcoin, were much higher than long liquidations. We're talking $90.66 million in shorts versus $68.94 million in longs.
So a bunch of people who thought the price was going down got squeezed out.
Pretty much. And when those short sellers have to buy back Bitcoin to cover their positions, it can push the price up even more. It's like adding fuel to the fire.
So a classic short squeeze. Ouch, for those who are betting on the price going down.
Yeah, and this source compared it to the broader crypto market where long liquidations were actually slightly higher. So maybe there was some nervousness in the altcoin market, but Bitcoin was still holding strong, at least among the derivatives traders.
Right, and the source also mentioned this huge $14 billion surge in large Bitcoin transactions right before the Fed paused interest rate hikes. What's that all about?
Well, those big transactions usually suggest institutional demand, you know, big players moving around. So while the speech itself didn't necessarily create a new wave of buying, there were definitely some other factors at play that suggest strong interest from larger investors. It implies that maybe the market just absorbed that speech-related dip without losing its bullishness.
Okay, so the speech was a bit of a blip, but the derivatives market and those earlier big transactions don't scream sell-off either. Now, let's talk about what the technical analyst was saying. What levels were they watching?
Well, they said that if Bitcoin could hold above $82,000, it could be enough to push it toward $90,000.
And that makes sense, considering what we saw with the short liquidations, right? People betting against it at those lower levels are getting burned, which suggests there are buyers down there.
Yeah, exactly. It reinforces the idea that there's real demand preventing a big drop. The source also mentioned a stable range between $83,600 and $85,900, which is where we've been bouncing around lately.
So where might we see resistance on the way up?
Well, the upper Bollinger Band, around $92,252, was identified as a potential resistance point. Bollinger Bands are basically a way to visualize volatility. When the price gets near the upper band, it can signal a point where selling pressure might increase.
Got it. So the opposite would be true for the lower band.
Yep, the lower Bollinger Band, around $78,064, would be a key support level if things started heading south.
Okay, makes sense. The source also mentioned the parabolic SAR indicator being below the price. Can you explain what that means?
Sure, the parabolic SAR is this little indicator that follows the price. When it's below the price, like it is now, it's generally seen as a bullish signal, meaning the upward trend is likely to continue.
Okay, so another bullish sign. And the source noted that volatility seemed to be decreasing, with the average daily range dropping to 0.80. Why does that matter?
Well, lower volatility means the price isn't swinging as much day to day. These quiet periods can often precede big moves in either direction. It could be a phase of accumulation or indecision before we see a real breakout. But for a breakout to really stack, we'd need to see a big jump in trading volume.
Right, so we need some serious action to confirm the direction. So the technical picture basically shows two paths. If Bitcoin can break above $86,000 with strong volume, we could be looking at a move toward $90,000. But if it can't hold around $84,000, it might retest that $80,000 to $78,000 range, and maybe even go lower if the whales slow down their buying.
Yep, that's a pretty good summary of the situation. Now, let's step back and look at that comparison to the 2017 bull cycle.
Oh yeah, this is the part that really got me thinking. The idea that history might not repeat exactly, but it can rhyme. The source pointed out how similar Bitcoin's price has been since the 2022 lows compared to that crazy run-up in 2017.
It really is striking how closely they've aligned, at least initially. It makes you wonder if we're on a similar path.
But then, things started to diverge, right?
Right, instead of continuing to surge and hitting new highs like it did in 2017, we've seen more sideways movement and even a dip after that peak above $100,000.
So maybe the Rhine isn't perfect after all. It's a good reminder that past performance doesn't guarantee future results, right?
Definitely, each market cycle has its own unique dynamics.
But what's wild is that even with that recent divergence, the correlation between this cycle and the 2017 one was still super high, like 91% early this year and still around 91% recently.
Yeah, that's a strong correlation. It suggests that despite some differences in short-term price action, there are some underlying similarities in how the market is behaving compared to that earlier bull run.
Right, and the source also brought up the MVRV ratio, which compares the market value to the realized value. What can that tell us?
So the MVRV ratio basically tells us how much profit or loss Bitcoin holders are sitting on compared to what they originally paid. And what's fascinating is that the MVRV ratio shows a similar structure between now and the 2017 cycle. We saw that early bull market rally followed by some pretty big corrections. Even with the recent dip, the correlation in the MVRV ratio is still high, around 80%. This suggests that even if the price isn't moving exactly the same way, investors are reacting to gains and losses in a similar way, like when they take profits or accumulate more.
So even if the price chart isn't a perfect match, the underlying psychology seems to be rhyming. I like that. Now, what about this idea of a data lag? The source mentioned that as a possible explanation for the divergence.
Yeah, that's an interesting point. They talked about global liquidity, which is basically the total amount of money washing around in the economy. And historically, changes in global liquidity seem to take about 2 months to really affect Bitcoin's price.
So the effects of macroeconomic events might not show up in Bitcoin right away?
Exactly. It takes a bit of time to filter through. And the source took this a step further by applying a 30-day lag to Bitcoin's price when comparing it to the 2017 cycle.
And what happened?
The correlation jumped up to a whopping 93%. So if we account for a little delay, this cycle might still be playing out in a similar way to the 2017 one.
So it's like this bull run is on a slightly different schedule, but the script could still be the same.
That's one way to look at it. This recent sideways movement might just be a temporary blip because of that lag. And if that lag correlation holds, we could see things pick up again, just like they did in 2017.
Wow, that's pretty wild. So history might not repeat, but it sure is giving us some hints about what might happen.
It's a good reminder that market cycles and investor psychology can provide valuable context, even if they can't tell us the future, for sure.
Absolutely. So to wrap things up, it seems like that dip after the speech was mostly profit-taking after some expected news. The derivatives data still looks bullish overall. Technical analysis shows potential for a rally if we can hold above those key support levels. And when we zoom out, that comparison to the 2017 cycle with that time lag is super intriguing for the long term.
Yeah, I agree. It's this fascinating mix of short-term reactions and potential long-term cycles.
Well, this has been a super insightful deep dive. So considering all of this, what do you think might be the most surprising factor that could really shake things up for Bitcoin in the coming months?